We are back.
Indeed we are. Episode 49 of The Golden Call. This is going to be more of a trading related episode. A lot of you guys obviously know that I'm a trader and you want a bit more advice as much as we can give and a bit more information about trading, why traders fail, how you can overcome those problems. So my boy here, Nocky T, has curated a list of questions that I have not seen yet. He's going to fire them at me. So it's questions that you guys have been sending in on social media. He's going to fire them at me and I've got to answer them off the top of my head.
Yeah.
As you can see, if you watch this video, I've got no notes here whatsoever, nothing.
Let's do it.
Here we go. Question 1.
How much risk should I put down per trade and why?
Okay, so risk management is important for multiple reasons. One of them is obviously so you don't lose an exceptional amount of money for one trade if that trade goes bad. If the trade goes good, yes, you can win a lot, which is why some traders do risk more than they should because they're thinking, well, hang on a minute, if I put 10% down on this trade and it comes in, wow, I'm going to make loads of money today and I'm going to become rich very quickly. Unfortunately, it doesn't work like that. The reason is because, this is another reason why we risk manage, so it doesn't mess with our mindset. So if we risk the correct percentage per trade, like 1% or 0.5% per trade, not only are we managing the risk correctly so that if that trade does hit stop loss, it doesn't hurt us. We've lost 0.5 or 1%. We've got now another 99 or 99.5% of our account to play with. So that's reason 1. Reason 2, if you're in a trade with a risk of 0.5 or 1%, you don't really care what happens too much. So you're just like, yeah, it's fine, I'm going to let it play out. So you're more likely to stick to your trade plan and analysis and yield better results long term by risking small.
There's also a gambler's mindset to this. Just saying. I'm going to throw in there.
Oh, 100%.
So
that's where the bigger lot size comes in.
So this is why I'm saying, like, backing up your point about consistent percentages.
Mm-hmm.
If you're trading 1% every single time, then you'll never ever have this thought that happens where someone goes, oh, I'm going to stick to 1%, and then they go, oh, I could make more money. So they go to 10. They make bank because they've like 10 times the amount of risk. And then the next time they lose 10%, so then they drop back down to 1%, and then it goes, and they're like, oh my God, I made profit. If only that was 10%. So the next time, then they go to 10%, and then they lose, and they go, oh, I can't do that. So then they go back down to 1%, and then they go, then they win, and they go, oh God, what if? And there's just this what if rolling around all the time.
There can't be no ifs, buts, maybes, ifs, would've, could've, should've's, nothing.
Beautifully segues into my next question, Ryan.
Segues, I love that transitional word.
What does a trading plan look like?
So a trading plan is essentially your trading strategy. So you're going to have confluences in your strategy that have to be met. Green lighted all the way through. Tick, 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 tick. Yes, I can now enter this trade. If one of your confluences isn't ticked, that means your trade plan is not met. Therefore, you do not enter the trade. Simple, black and white, right?
So I'm going to
not as easy as it sounds because a lot of people mess that process up.
I was going to say, I'm going to digress a little bit because a lot of people say it's down to discretion. And I've seen a lot of different trading communities talk about discretion. So like if you've got like a trading plan that has 5 different things that have to be ticked off, what if 4 out of the 5 are ticked off, but not that 5th? Doesn't matter.
Well, if your trading plan says all 5 have to be ticked and box number 5's got a cross in it, you're a fucking idiot. Well, my trade plan says all 5 boxes have to be ticked.
I nearly spat my water out.
Box 5 has a cross. I'm going to take the trade. Come on. Fucking
I've just seen it in communities, mate.
Common sense needs to prevail at some point.
They talk about discretion.
Trading discretion also means that, for example, if prices are at your entry zone and there's the discretionary thing is, oh, I can take that trade, but there's low probability because this hasn't happened yet. It's down to the trader's discretion if they want to take that trade or not, because it is technically a valid trade.
Would you say you have to be more experienced to analyze this?
Not necessarily. Like, for example, I've got a strategy called GP123. This isn't an automated strategy. This is a manual strategy, and it has a tick list. And what I've got is it's like 4 confluences have to be ticked. Then there's 2 bonus confluences, right? One of the bonus confluences has to be ticked. Just one of them. If they're both ticked, perfect. But only one of them has to be ticked. If any of those boxes have a cross in, that's it. You're not taking the trade.
Even the 4. Sorry, no. So 4 is good.
Yeah,
But then what if
and one bonus.
has to be one bonus.
Yeah, has to be one.
Right.
So if there's no bonuses, that means there's a cross.
Right. Okay.
Yeah, or if the first four is one of them's crossed.
So does this then segue into this next question, which is, what is overtrading and how can I stop it?
Overtrading. So this is massively common in two types of traders, and I'm speaking, guys, from all the experience that I've had in the world of trading and all the mistakes that I've made. So this is coming not from me not only teaching other people and seeing the mistakes they've made, but my own personal, very costly mistakes that I've made when I first started trading, then I went full-time trading. So this happens to two types of traders. When they first start trading, they're overtrading. And when they learn not to overtrade no more, okay, great, I'm no longer overtrading, I've learnt my lesson, then they get good at trading, they leave their job, and then they go trading full-time, they make the same mistake again, right? So what happens is overtrading is where you're continuously looking at the charts all the time. You want to take every single opportunity you can lay your eyes on, right? And if you miss anything, you feel absolutely gutted. So you're trying to fill that void because I've missed it. Or if you go away to work for the afternoon and you come back to look at the charts and you go, oh, could have caught that. You wouldn't have. Hindsight with trading is an amazing thing. At the time, the chart didn't look like how it looks now. It's very easy to look back and spot opportunities. So traders that have that kind of FOMO, like, I knew I should have tapped, I could have done this. They're the ones who's taking every single opportunity that they can find, which ultimately leads to more risk because you're in the market more. You've got more trades open, which means more trade management, which is now stressful, becomes difficult. You've got trades flying all over the place. It's a horrible experience. So overtrading and spending more time on the charts, which is usually the root cause of overtrading, is horrendous. You will just lose money. Don't get it wrong, you're going to have some amazing days. You'll be like, oh my God, everything went well today. You're going to feel like you're on top of the world. That leads to overconfidence. The next day, you're going to overtrade again with your newfound overconfidence. Oh my goodness. It ends badly.
Always.
So you just got to take the trades that fit your plan. And the reason why trading can be difficult to start off with is because where it goes against the human mindset is less is more. Where throughout our lives, we said, work hard. So more work we do, the more money we're going to make. So when we're trading, we're thinking, but obviously, Ryan, more trades means more money. No. Less trades and higher quality trades means more money. Easier life, less stress. If you're less stressful, you're managing your trades correctly with the correct risk management and the proper mindset.
Amazing. Because I'm trading, should I be looking at world economy and knowing what my economy is? And knowing all of the news and all of the up-to-date things with what's happening with different banks and rates and so on and so forth. Does that affect my trading? Do I need to know these things?
Okay, so back in the 70s, 60s, 70s, most of the all of the trading was pretty much called fundamental analysis, right? So they look at the world, they say, yeah, the interest rate has to go up because of X, Y, and Z is lining up, so the interest rate has to go up. So what they do, they then put their position on GBP, they believe the interest rate is going to go up, so on and so forth, right? But then technical analysis was born. And I was like, oh, hang on a minute, different patterns keep playing out time and time again, and more often than not, which is what most traders are now, right? A technical analyst. It's not often you'd find a fundamental trader. Some people try to be fundamental traders, but it's very tricky to try and trade off fundamentals around the world. It can give you a good overall bias, but if you're trying to trade on one news release like CPI data or an interest rate decision for the UK or whatever country it is, you're now moving into the lines of gambling because it can wick down, it can wick back up. The brokers inflate their spreads at that time. It becomes very tricky. So it's good to know what news is going to drop when, so you can manage your trade correctly. So, for example, there's like an NFP news drop on the first Friday of every month, and you're like, well, I'm in a dollar trade right now. I've got NFP coming up, my trade's in profit, or my trade's around break even, or maybe even in a small loss. You might just consider closing the trade. One, you may get some slippage, especially if you're in a trade with a very tight stop loss. Sometimes your broker can't get you out in time, so you may lose more than what you've risked. Two, the trade could really well go your way, which is fantastic, so you can make a lot of profit, or it could go against you and you're going to hit stop loss. So it's down to you whether you want to trade for these news events or not. Nobody truly knows what's going to happen with these news events, whether the news is going to be positive or negative for your trade. For me, I look at fuck all to do with fundamentals. The reason why is because nobody knows what's going to happen. Me knowing that the Australian employment rate's gone up, it's already too late that I know that because the move's already happened.
Right. Okay.
Do you know what I mean?
So if I want to see these kind of different types of news things that you're on about, where do you look at it?
You go on like forexfactory.com. You can go check that out. Inside the Golden Sweep free Discord, we've got like a little alert that goes off 30 minutes before the news is released.
Oh, cool.
So, so a little alert comes, so it goes bing, GBP, high impact news in 30 minutes. It tells you what news it is, so if people are interested. And then that's your little reminder. So if you are in a trade, it's a little reminder for you 30 minutes before, just so you can manage your trade accordingly. When using NextGen, I trade through every single news event. So it's either kind of like you trade through them all or you trade through none.
Right, okay.
Like the fundamentals of the world, I'm a massive technical analysis guy. That's what I've always done. That works for me. I don't care what data's flying around out there. It just doesn't matter to me. I've never, well, to start off, I used to look at it and try and understand it. Then I realised it had no value to me. And some traders might be saying, this guy's an idiot. What the hell? He doesn't look at what's going on. He doesn't look at the current interest rates and what's going on with the government and the economy, inflationary rates, stuff like that. I don't need to, right? I'm making money without doing that. I'm not going to waste my time doing it.
So that brings me on to the next thing, which is how... Oh, no, wrong one. Research suggests that 70 to 90% of traders fail to make a profit. Why?
Yes, that's definitely true. And there's so many reasons why that we could cover right now. I'm trying to hit out the main points. And if you're trading, you're listening to this, I'm sure that you can definitely relate to some of these points, as I can.
Bullet point them.
From the start of my journey.
Fly it.
So the top reasons why traders fail is, one, they'll be using a strategy. For example, the strategy works. And then it's not working for a week or two. They say, this is fucking shit. What they do, they go and try a new strategy. The same thing happens with that strategy. Then guess what? They may join another trading community. And the same thing happens with that strategy. So what's happening here is they're not seeing the repeating pattern that every single trading strategy in the world that's ever been invented has a losing period. It's a market cycle, right? It will happen to everybody. I don't care who you are. I don't care if you're screaming at the radio now saying, nope, I win every trade. No, you don't. It's not mathematically possible to do that. No trade in the history of the world has ever done that, or will ever win every single trade, or win every single week, or win every single month. At some point, the market has a cycle where the strategy and your market just aren't gelling together. It's as simple as that. Accept it. Stick with a strategy instead of trying to jump around to each strategy. Shawnee object syndrome, right?
Yep.
So that's one of the main reasons why traders are failing. They're not really giving something a real good go, a test of time. There'll be ups and downs, but there's more ups than there are downs because of risk to reward and obviously edge in the market. That's one of the main reasons. Secondary is being impatient. Being impatient kills off a lot of traders because they want the results instantly now. They're like, no, I want to make X amount of money now, or I need to make this much money. I've got traders coming to me saying, look, I need 10 grand. What's the quickest way for me to make it? I'll say, get the hell out of here. Sorry, we can't help you. Because I know they're going to lose more money than what they're going to make. There's no point of them trying to trade to make a quick 10K. Like, I'd love to be able to tell people now, go, yeah, come join the gold store and make you a quick 10 grand. No, because you're trading with the wrong mindset straight away. So they're being impatient. People want to make money really quick. They get the fear of missing out. They're jumping in loads of different trades, bigger lot sizes, risking way too much what they should be, all because of the root cause is impatience. So first, and do you know what? I don't think it's their fault. Social media definitely portrays this crazy lifestyle from trading. And don't get me wrong, like when you've got it and trading's going well, I mean, you can use NextGen straight away, and that's going to just literally like accelerate you to the level where I'm at now, straight because I'm using NextGen. So you could be on the same level as me.
I mean, it's literally your strategy just automated.
Yeah.
So it means that anyone can use your strategy without the human.
None of the discretion, nothing like that. Like you could just fast forward to where I'm at now, skip all the losing, all the practicing, all the studying, bang. Like you're instantly where I'm at now. And then you just won't have as much funds as me, but you might do to start off with. But you can certainly build up to that, like other people are.
And mate, there's also prop funds are mad.
But that's what I'm talking about. Yeah. People can just build up their prop funding. They can use the Golden Sweep prop firm. So what you need to do is just be a bit more patient, because that's what's killing off traders super quick.
So I was going to say, what 3 things should I do to help my trading journey? And a lot of the things that we talk about on this podcast specifically is mindset, and it creeps up again and again and again and again. Even talking there about patience. Mm-hmm. What 3 things can you suggest for me as a trader that is going to help my trading journey?
Yes, so there's multiple things. I really don't want to say it, but I'm going to say it.
Come on.
the best thing to help your trading journey is just get an automated trading system like Next Gen and let it do it for you.
Right. Okay.
Sorry, turn the podcast off.
Bro, I'm with. Okay. I agree.
Okay, but let's talk
For the
about
manual
trading.
Manual trading.
People,
People who actually want to day trade, they want to swing trade, they want to scalp, they want to be a full-time trader. They're passionate about the financial markets.
So first of all,
give me first thing.
You need to come into trading.
First, wait. I was gonna say, give me three things, and then explain the three of them.
Yeah, that's what we're gonna do. So first of all, yes, mindset, not just with trading, but with any business endeavor is important, right? So you don't go and start up a business and think you're just going to get rich from the business straight away. Like any other business apart from trading, you understand it takes time. You need to build it up. You then got to find clients. You've got to do the marketing, so on and so forth. You know it's going to take a long time to build up, start making some good income. So that's the same mindset with trading. Like you don't know how to trade yet.
Yep.
You've not made a penny trading before in your life. You most really don't know how to use the software. So there's a learning curve there straight away. So, excuse me. What you need to do is come into training with a mindset like, okay, in 6 months' time, I at least want to be able to spot my own profitable trades, be confident, because that is so important, in the strategy that I'm using.
So what actionable steps can you give me?
So first of all, right.
3 actionable steps.
Right. This is how much I'm going to spend on my trading education, right?
So an actionable step is set out a budget.
Set out a budget.
Cool.
This is how long and how much I'm happy to spend. Done.
Time frame budget. Cool.
Yeah. Realistic. Don't say 6 weeks.
Okay.
Right. But from manual trading.
How much do you reckon?
You've got to say at least 6 months.
6 months minimum.
Like 6 months to get a fucking 6 months minimum. Yeah, 2 years. 6 months minimum though to really start getting your mindset on point. Master one fucking strategy. 6 months. And then you can start saying, okay, yeah, like I'm ready to go for some funding.
I think 6 months is good for learning all the technical analysis.
6 months is nothing, mate. You could be 6 months older without the skill or with the skill.
Yeah, that's it.
But
that's what I mean. It's nothing. It's not a lot of time.
It's nothing.
So I
6
think
months is nothing.
you can learn all the technical analysis in 6 months, but you won't learn the mindset until you actually start trading real money.
Exactly. So this is my actionable step number 2.
Yep.
Start off with a very small money account. Now, demo's good. Start off with demo first, so you're getting comfortable with using the software. That's the only real kind of substance that demo trading has to it is getting you used to using the software and the different types of trading indicators and good for practicing and stuff like that. But the only way you're going to help build your mindset is by putting your own skin in the game.
Yeah.
So you need to start off with a small trading account, not like 100 quid. You don't care about 100 quid, right? It needs to be enough money that you just about care about. So I don't know, if you're making 500 quid a week, like $2,000, that's a whole month's salary. That's enough money for you to care about now.
Yeah.
So stick $2,000 in there, because if you don't care about it, you're not going to treat it properly. If you care about the money, you don't want to lose it, you're going to risk manage fucking right.
Yeah, that's it.
So that's why it's important to start with enough money you care about.
Third thing. So we've got time frame so set out a time frame and a budget. Second thing is make sure you use real skin in the game.
Yeah.
Don't just sit on a demo account.
Real skin in the game. Start off small though.
Yep, that's fine.
Start off small, but enough money for you just to care about.
And then what's the third thing?
I'd say the third thing, come in with the right mindset, get some skin in the game, and just literally master one strategy. Don't try everybody's strategy that they're offering you.
Nice.
Try one and become I said this in the last podcast. I've got so much respect for people that just become a master of something. There's something so cool about that. Yeah. Like they just fucking own it. Like I love it. So if someone just fucking owns something, they know it like the back of their fucking hand. Like I don't know why. I just love it in any field. It doesn't matter what it is, from movie stars to traders. Like if you're mastering your skill, I've got so much respect because I know you put in the work.
So here's my segue into my next question for you.
Hit me.
Should I journal my trades?
Well, this is the big thing. And I think we spoke about this in a previous podcast actually about like journaling your trades. And I used to, when I first started manual trading, for just so I could look back and really become like a master of my strategies, right? But then once I did become I feel like I become a master of my strategies, I didn't bother journaling no more. Like I just kind of, I had them on the charts. Like I know what trades I'd taken because of I can look back on my MT4. So it's definitely good to refine your process. But after a while, I did not want to take a screenshot of my trade, write about the entry, write about my thought process, so on and so forth. I know a lot of people talk about this online, but sometimes I feel like they're just trying to fit out their community with a lot of fluff. So it's like keeping the community involved to keep getting subscriptions off. Like, no, you need to journal your trades, man. You got to do all this. I think it's just a bit of a smoke screen. Like once you're trading, and look, there's no harm in journaling, right? There's definitely no harm in it. That's for sure. I'm just like, I know what trades I'm taking. If I'm taking a bad trade, I'm looking straight back at that trade anyway, and I'm like, okay, why did it hit stop loss? oh yeah, look, I missed that. It didn't fit my plan. Remember that for next time. Yeah, I've got it. Okay.
So do you think trading actually helps people who maybe don't have that specific mindset? Because I feel like when I got into the trading world, journaling was like all that everything was all talked about. It's like, you should journal this, you should journal this. Funnily enough, this is the first year in 7 that I've not even started journaling. Like, so I used to journal my own life. Like morning, I'd journal, I'd like gratitude journal. Evening, I'd journal, I'd like review everything I was doing. This is the first year where I've just stopped doing that because, well, first of all, randomly off topic, the journal that I used to use stopped shipping to the UK.
Oh, right.
But so that's why I stopped. I've been more productive because the journaling ingrained it into me, that discipline into me of what, planning my week, making sure I'm well ahead. So now it's ingrained into me. I don't need to do it.
Yeah. So yeah, you converted your mindset now.
It was such.
I've got nothing against journaling. Like,
it was so drilled in.
Come from it. You know
it was so drilled in as like a be all and end all. If you don't journal your trades, you're a shit trader.
No, definitely not. I mean, I made journal and journal data now because of next gen. Like always refining it and seeing what works and what doesn't work, and so on and so to speak. So for that purpose, I am. But like for manual trading, no. Like at the start, it's good too, but you don't have to think like you need to journal everything forever. Yeah.
Okay.
But like I say, if you enjoy doing it, do it.
Yeah.
But I don't think it's a massive necessity.
Swing trading versus day trading.
That depends on your time, on the time that you have to trade. So a lot of traders that are working full time and they want to manual trade, so they're not using the automated trading. They start off with swing trading purely because they don't have to be on the chart so much. They're using the higher time frames, where day trading does mean you need to check in a little bit more, especially if you're going to be looking to take like 15-minute entries so you can get like a total stop loss and a bigger risk to reward and so on and so forth. So first of all, day trading or swing trading, how much time do you have to spend on the charts? That's like the first thing I'd say. Secondly, is people just prefer swing trading sometimes because they don't want to be taking loads of trades. Happy just to take one trade and leave it for 3, 4, 5 days, a week, or maybe even 2 weeks. So
scalping.
So I started off as a scalper.
Really?
Yeah, and I tell you something, it takes up a lot of your time because you're getting in and out and you're on the charts a lot, and it can lead to overtrading. So scalping is good. People like scalping because they think they're going to get a bigger return. But there's a cost to that bigger return. The cost of potentially overtrading, the cost of watching the trade, especially if you're going down to like 5, 4, 3, 2, 1 minute time frames. You're like watching, which isn't healthy. The old heart rate starts going like, come on. So that's not good, right? And thirdly, it's not as much higher risk, but you're taking a lot of trades when you're scalping. So you are exposing more risk to yourself because you're in the markets more. So the more you're in the markets, the more risk you're at, right? So I found a nice comfortable area for me, which is day trading.
Day trading. Is that what Next Gen's built off?
Yeah, so it's kind of in between day trading and scalping now. It's like a hybrid of the two. So we've got USD-JPY, which executes trades on the 12-minute time frame. Then we've got GBP-JPY, which is taking trades on the 25-minute time frame.
So that actually answers my next question, which is what time frames does Next Gen use, and why do you choose those time frames? What's the significance?
Well, many traders are thinking, I've never even seen a 25-minute or 12-minute time frame. That's because I do a shitload of testing. Literally, that's like my full-time job, just testing data. So what I find is I can create really good strategies, and obviously I'm using them live myself, and I'm like, yeah, I'm really happy with this strategy. But then how could this strategy work on different time frames to the common time frames that traders are using? So I initially would test the strategy on like the 1 hour, 30 minute, or like the 15, for example, which is like the most popular time frames, right? Along with 4 hourly, daily, weekly. And then I'd start to just kind of like go up and down the time frames and try and find these more kind of rare time frames that no one's using. And I have really good success on those time frames. And it's like, well, if it's working better on a 12-minute time frame than what it does on a 15-minute time frame, why would I not be using a 12-minute time frame?
Yeah, yeah, I understand that.
At the end of the day, it's down to the money.
I'm going to round off this the questionnaires here. Well, you smashed all those questions amazingly.
Thank you, sir.
Thank you so much. I'm going to round it off with some fun questions.
You asked them so beautifully.
Oh, thank you. Oh, my God, we're just bromancing right now. I'm going to ask you a beautiful question here.
Yeah.
This is going to be a bit of a fun one. And I want you to just give me the 2 figures, and then you can explain stuff afterwards. How much funds under management, so how many prop funds have been passed in the Golden Suite by people using the Golden Suite? Yeah. What's the figure?
Fucking hell. We started a long time ago. So there's a lot. Over... Right, if I can show a picture of my wall now, I stopped putting certificates up back in 2020, There's a wall there.
Lots of fucking
Yeah,
certificates.
maybe 30, 40 certificates, but we're well over 20 million.
My God.
I literally stopped calculating, but I'm going to start again. I'm taking down those certificates. They're all FTMOs. And I'm going to start, because we've got our own prop firm now inside the Golden Suite. So when people start passing the Golden Suite prop funding, which they just launched, so once they start passing, I'm going to just put up those certificates.
Yeah.
And I was going to start a calculation from there. But yeah, well over 20 million.
And then
December.
Yeah.
So September, October, November, December, Next Gen was just smashing it out the park. Just from like December to the first week of January, we had over 50 passes. That's phase 1 and phase 2 like combined though.
50. 50.
50.
Just off Next Gen?
Yes. 50.
Just off the auto trading, there was 50
look at my Instagram post. You'll see like just keep swiping. There's loads, which was awesome.
Dude, that's mad.
But then the rest of January was rubbish.
Yeah.
So
I mean,
but there's market cycles like that, and February at the moment I'm currently running a loss, and I'm not scared to say that because this is part of trading.
Yeah.
But then like December I've done like 20%. So you got to roll with it, man.
So that was the first one. Second one, what kind of funds under management are you running right now?
So I've got just under 1 million. The reason why that is, fucking hell. Do you know what? I actually need to email them back because I've done zero about this at the moment. So I had 100k with my Forex Funds as well, which I've had for a while. They're not my favourite company by any means. Maybe we'll get into it on another podcast, like who are my top people to get funded with.
Yep.
Yeah, that could be a good podcast. Yeah, because I've been with FTMO, the Funded Trader, currently doing one, or about to start one actually, with Funded Next.
Would you not just use your own prop
Yeah,
funds?
I've got my funds with my own prop firm as well.
Yeah.
But it's good to diversify in any world. So, but anyway, I had these funds before my prop firm come along anyway. So I've got just under 1 million. The reason why is my Forex Funds emailed me and said, copy trade violation. We've seen you taking same trades as other people. Obviously, it's Next Gen. I'm not copy trading. So it's just Next Gen taking the trades.
Yeah.
Which when I first signed up to them a year ago, they're like, yeah, that's fine. You can use an EA, so on and so forth. But what they think's happening is that my account is connected to somebody else's. So I need to explain that to them. Then they give me my 100k account back.
So you're at mil.
Yeah, but I'm technically suspended at the moment for 100k.
Did you do that manually trading last year?
Next Gen. So
all on Next Gen.
All on Next Gen.
So in 11 months to a year,
yes,
you smashed out 1 million in funding.
A million in funding, but you're taking a lot of funded accounts. And
how many accounts did you take to get that?
Mate, I don't even know exactly how many. I was just leapfrogging like loads of 200k accounts.
Yeah.
And then I've done a 500k one, which obviously boosted me up massively. But the problem is you're always in an account, so you're always checking in on trades, which I don't like to do.
Yeah.
Because when it gets close, you're just closing them out, right? So you're always on, like checking in, right? Am I at like the target yet? So that takes a lot out of you, especially when you're not used to checking trades all the time, which I don't. I'm like, I've been training a long time now, so it's programmed into me, just set and forget.
Yeah.
And let Next Gen do its thing. But also when I'm in a funded challenge, I'm looking for scaling in opportunities so I can get it over the line quicker.
Right.
So sometimes if I'm getting close, I'm like 1% away, and the trade looks really good that I'm in, that Next Gen's in, and it's pulling back. I'm about to add another position on, so it's called scaling in. So now I can just go bang, just get straight back over the line, and I can close all the trades. But the funny thing is, every time I scaled in, Next Gen passed it for me anyway.
Right.
So I actually didn't need to do anything whatsoever.
Mad.
So yeah, so on 2 of the challenges I scaled in, and the others I didn't bother.
So in the Golden Suite, we've lost count, but it's over 20 million. And then last year alone, just on Next Gen, you did in 1 million in funding. 1
million on funding. But guys, if you want to get funded with £1 million, obviously you can take like a couple of 500k challenges, or some companies even offer 1 million in one go. If you can afford to do that, obviously do it. But obviously most of the people don't really want to lay out like, 3 to 5k to get like 500k or 1 million account, which is fair enough. For the people that can do it, it's worth doing it. Of course, if you pass, you've got a considerable amount of funds under management, and the payout that you'll get from those funds under management will be huge.
20% of a mil.
Yeah, so you're talking big bucks. Yeah, which in relationship to how much you've paid to get the account, the risk to reward's worth it, right? But how I done it, I take like X amount of size of account, and I just leapfrog those accounts like once every 2 weeks. So I'm always catching like at least a good market cycle. Yeah. So sometimes I pass in 2 days. Sometimes one of them took me like a month or even 2 on the phase 2s. So it takes a bit. Then I had a 3-month period of just getting retries where it just wouldn't hit the 8% that I needed.
Right.
But it didn't lose money. It was making money because I was getting a free retry, but it just wouldn't hit the 8%. And that's the thing, like with next gen, you can't expect to hit like 8, 10, 12% every single month. Like no system would do that unless you're risking a lot. If you're risking a lot, you've got more chance of bigger drawdown. So you've got to find the right balance.
Got to find the sweet spot.
Yeah, got to find the sweet spot, mate.
Thank you, bro.
Hope I
Love this
answered,
knowledge.
hope I answered everyone's questions the best that I could.
Send some more questions in, and I'll get Ryan to answer them
Yeah, send them in.
because they were really good.
Business, income streams, trading related. I'm happy to answer and share my knowledge that I can.
I'm gonna use your phrase here. Peace out.
A-Town.